Welcome back to this another live session, traders. Third day of trading week, 24th of September 2025. Starting another trading day with the first session of the day for the London, as well as coming up also NY session. And yesterday we didn't have any live trade. Now today, looking forward to enter as soon as we see the market is showing up any opportunity here. We have seen that the market has broken back below to the level we discussed yesterday, that the market potentially to come back here to this daily low, and we can see the price in fact dropped to that previous support level and has got that strongly rejected. This is the daily chart. We'll be doing a complete multi-time frame analysis. And before that, I would like to see that all the members are here ready for any entry as soon as it comes up. If you guys are here, two things: like this stream, smash the like button, and also say yes in the live chat. If you are here, don't forget to like this stream. Don't forget to say yes so that I know that every member ready to start another trading day with potentially successful trade setup. Ready for another trade setup here. Let's begin another trading day with possible profitability for this session as well. And today, what's coming up later? We have seen that early. And we have seen CPI on AUD 3%, so which is a positive growth that we have seen in the AUD currency, and that has also will have definitely some influence on gold. And later tomorrow coming up also some announcement. If we look at the calendar, what we can see, Thursday tomorrow coming up in our session that we will be looking at CHF, as well as a big day for dollar. So today the market potentially getting prepared for that, and we also with that preparing for a potential move here. And gold, we can see that from the daily, the candle closed with a very healthy trending market structure here. Welcome. Thank you. Welcome. Now we are waiting for a potential healthy trade setup. Now this is where the previous daily candle closed on gold. We can see there is a long wick at the top on the daily, and with that long wick, what does that represent? I'm first looking at, guys, the daily chart, because daily chart is where there is a very important information on the daily chart, because this is where you can see the trending direction. Daily chart is, if you look at the time frame, if you look at, if you consider the time frame in the chart, that significance is very important, right? Significance of time frame, then daily chart is the most important time frame that you can look at. All right, so if you trade, let's say, one time frame, either 1 hour, 15 minutes, 4 hour, 5 minutes, even 1 minute time frame, and you look at the daily only, you are done for trading. Okay, very important daily time frame. So always keep eye on the daily time frame. As soon as I look at the chart, I first look at the daily chart, because when session progresses, right, daily low, daily high in terms of trend is very, even if you are trading on 1 minute chart in an uptrend, for example, if you see the market tested the daily low after a certain move, and the price has created an inverted head and shoulder on the daily low, where you can look for best trade setup possible in the market. So we'll be discussing on that. Are you trading in currencies too? Yes, of course. Join first time, welcome. Thank you. We have a big list of the currency that we look at. Why not? We are trader for finding the best trade. all the time. So you'll be looking at here after this gold chart. Also you'll be looking at we'll keep another window for some of the pairs that you will be looking at. Along with gold, also we will be looking at some pairs today. Dollar yen pushing back to the upside here, which is start to trend in the major direction. We'll be keeping eye on dollar yen. While gold currently, what you can see here, that now gold chart, we can see there is a there was a okay. So if you look at okay, now looking at the 4-hour chart on gold, that after the daily chart, that what we looked at on the daily is the trend. Now what kind of candlestick pattern in the market that we can see? If you look at the previous daily candle, what do you see? There is a long wick at the top and it's in a sharply uptrending market. So what does that tell you? That this long wick, all right, there are two interpretations that you can make with the previous daily long wick, right? One is rejection. This is where you learn that either to buy or sell. The other one is, can anybody tell what is the other one? So for the same long wick on the daily, you can have two anticipation or interpretation for this daily candle, right? There is one here, there's another one here. So for the, if you look at the daily candle on the, you know, this is the long wick on the daily previous day. One interpretation is, so it's liquidity. Okay, anyone else have any different opinion? What is the daily candle long wick represents here? Liquidity, rejection, what else? Because long wick means that there is selling happen. So what interpretation you can use for this daily candle? Welcome, retracement. Elizabeth Dennis Ebenzer. I have a very, sometimes I find it difficult to pronounce different names, by the way. Yeah, entries. Okay, cool. Yep, that's very good. So this is what it is. Okay, exactly. Retracement or the pullback. So one interpretation that daily long wick can be rejection. The other one is correction, right? Now this daily candle that you can see is correction. Now we will be discussing more in depth on why it is correction, why it is not a rejection, and then how you can next time spot this kind of either it's a rejection or correction. Also we'll be discussing later in this video. So daily candle, that long wick formed at the top is a correction. That means this information is a big deal, because if in a healthy market, if you see that it's not a rejection but a correction, then this is where our trading opportunity to the upside. If it is a rejection, then we could look for sell opportunity. But if it is a correction, then you will be looking for buy opportunity, because that's the sign of healthy trend, right? We don't want to trade on a market that is in a fake trend. So a healthy trend has an impulse, and then that has to have a correction, and now it will create an potentially another impulse. That means we can expect the market to cross that daily high either today, tomorrow, or at any point. That means the bias to the upside. We found the directional bias. Now we need to look at the level to buy here. So looking at the 4 hour, you can see this is the 4 hour candle, and we have seen there was a break of structure. This is what I was talking about always. The break of structure, back to back, 1, 2, 3, 4 sessions. The market dropped to that level, to this support, and then got that rejection back above here with one single move to the upside in this market. So now this is the 4 hour candlestick pattern that you can see the current session, and it's a bull market. So we found that potential our take profit level could be at 3790 or above. Now entry level, right? We are looking at now entry. We found the directional bias. There are two, not in fact two. You need to answer to be successful as a trader. www. You don't have to look at the dot yet, but you need to answer 3W, right? It's very important. It's a very it's not a worldwide way, but we'll see that here. To be successful as a trader, you need to be able to answer this 3W. The first one is which way, the directional bias. In your trading account, there are two buttons, red or blue. Which one you should be pressing, that buy or sell. That means that directional bias, right? Which way to trade, either to buy or sell, that you can determine from this. So you have understood that because there was a daily correction or the retracement or the pullback, it's a healthy trending market. There was a break of structure. The market purge or recharge for potentially another move back to the upside. Therefore, we will be looking for buying. So we found that which way is buy. Now, not this buy, okay? Now the next W that we need to look at is when, right? You got the point that this is a bull market, and even if your correction, if you're directionally correct, still if you don't know when to enter, you might be entering in the right direction, but if you stop loss in the wrong place, you might be going out of the trade without profit, right? So that might happen. That's why second W, that means when. Now you found the direction when you should be entering. That is another vitally important question. That is what we will be looking at from the two other factors. We found the market structure bullish, the price action, and the liquidity that you need to look at, right? So these are the three fundamental factors that you need to look at as a trader, not the fundamental, but the fundamental factor of the technical aspect in the market to look at when to enter. Okay. Now, when to enter will determine by the support or the zone where you will be entering, and that will be determined by the price action and the liquidity. All right. So we found the 2W. What about the third W? So this is missing piece of the puzzle, right? This is where everybody fails. That I would say that everybody who are correct here but not being successful is because of the third W. This is why, okay? It has an inherent relationship with your success as a trader. Why? Because you are correct in direction, you are correct in your entry, but you don't know why you are trading, then you're not most likely not being successful, because it comes with a stronger emotional aspect in trading. Because whenever you are correct, you're directionally correct, you are all aspect correct. But if you are not resilient in your emotion, then you're not gonna be able to run the trade properly. Is because trading is highly emotional, and it's the big part of trading psychology. Being able to stable or resilient in your emotion is where the successful. So when you know that why means that why you are trading. So let me know, guys, what's your why in trading? Are you wanting some time off? Or good evening, good morning everyone. So what's your why in trading? Let me write down. Let me know in the live chat, guys. What's your why in trading? This is the third W. That will give you a long-term protection of your emotional aspect as a trader. Financial freedom, very good. Anyone else? Will gold ever sell deeper retracement for untested levels? There could be, but at the moment we see it's in a very strongly bull market. Okay, so share your why you are trading. Make sure you like this stream, guys. Time and financial freedom, very good. Develop a skill in trading. Okay, what I would suggest, guys, is be more specific. The more specific you are, the easy to achieve that. This is another secret. Okay, be more specific. The more specific you are, you're gonna straight away you will hit the target. All right, financial freedom is a very, very important criteria, but it's a generalized. Be more specific. For example, what do you want to achieve out of trading? Yes, financial freedom, but how? Like what area you need to look at, what you want to change in your life through trading. It's very possible if you are disciplined and doing it properly, but you have to be specific, right? For example, if I give you a criteria or example, you are retired, you need financial freedom. You are a student, you need financial freedom. You are doing a 9 to 5, you need financial freedom. All of them need financial freedom. You are, mother at home, you need financial freedom. But what's your specific that you want to accomplish? That's where the W. So that will give you a push when things not always in your favor. So now we got the triple W to succeed in trading. Let's look for the entry for today as a trader. Now this is the 4-hour chart that you can see. The current session's low is here. I'm looking at the session's low for a potential entry for this move here back to the upside. Looking at the 1-hour chart, if you look at, you can see that this is a bull market that we have found. We see that there was a strong breakout waiting for a potential correction here to this level. This is the 1-hour chart here as well. We can see that it's a key level of support, and the market here has broken this resistance line. Let's wait for the 15-minute chart here from the session's low that we will be potentially be looking for entry in this market. If you look at the 4-hour here, this is the session's low is in that area. So if you look at this lower time frame, there is a trend line here on the lower time frame. and in that support level that you can see, there is a crossover of 10 and 20 EMA, respecting this 10 EMA as a dynamic support, expecting the market to potentially drop down here to this support level and then to revert again back to the upside to create a new higher high in this market, waiting for the price to potentially drop back down here to retest that support and then to reject back again to the upside. Now even the market cross above further and could come back down to this 1 hour support level that I'm looking at here as well at the moment in this 2 time frame. So this is the level that I'm looking at for a potential break below, and we can look for entry as soon as we see the market has managed to break that low. We need to look for that breakup structure, and the current level here at looking at 3771.02 or 3769. In that zone, once the market managed to break that low here, we will be looking for buy limit here for a potential upside momentum in this market. Now before coming here, the market is still could continue to rise, but this is our session's low that we are looking for entry for this upside movement in this market. I hope that guys you're enjoying the live session. Make sure you like this stream and also subscribe to the channel if you haven't done yet. Press the notification bell so that you're not missing any of the content that I'm posting every day. Okay, so we can see the market's trying to break that high here. It may easily continue to rise back to create a new higher high. That means the new all-time high above 3790 level. But before it reach there, you want to get in the trade with a breakup structure. 15 minutes chart, the market is showing that potentially uptrend here in that area. So here is the market is approaching this resistance line where there is a high liquidity, and we can see the price is approaching that key level. And once the price managed to cross that high, there was a break up structure here that we have seen from this level, a complete break below. The market is reaching that resistance line where the market may revert back again, and this is what we are looking at here, for the price to go ahead, hit that level, and then to return to the major direction of the trend. waiting for this breakup structure in that area, and we can see the market is maintaining that uptrending market structure for this potential upside here to this key level of resistance in that area. Okay, so now coming to the modified market structure, we see that the market constantly evolve, right? Changes every moment. That's why always look at the market from the very fresh perspective, which is what I call the beginner mindset, because every moment there's a new market structure is being created, right? So always look at the market from a fresh perspective, how the market is being created in the new market structure. You can see this is the current level of resistance line. The price is approaching that area where the price is approaching that level, and as the market is in an uptrend here, approaching this recent resistance line, if you look at the 4 hour, you can see from here bouncing off that level, and where the market is approaching that level, the price is reaching that area. What we can expect here, that the market to potentially bounce to the level, cross that high, and then to reject back again in the major direction. And that's where you can see the price is slowly building that momentum, right? So you can see the price is, we have seen that upside move, expecting the market to potentially drop down here for deeper pullback, and then to return back again to the major direction here. So this is where it created that support from the 4 hour. We can see the market already has made its initial bounce. What we are looking at here, that the market to drop down for a deeper pullback and then to return again to the direction. So here we will be waiting for this break of structure before it reach that 3780.5 level. If the market drop down to this support level, we can look for that upside bias in this market. Now breakdown is important, that especially the breakup structure in this market, where waiting for the price to drop down here and then to return again to the direction of the trend. Now simplest way to know that every time the market structure changes, the level changes, the entry level, is to wait for the session's low to break. Now it requires patience, and that is where the biggest trading secret is to wait for the market to give you that entry that you are looking at. The market will leave an imbalance. Later it's gonna go back up to fill that imbalance in that area. So we have an entry zone. Have a look, 5 minutes. In an uptrend, if the price is retracing and you use Fibonacci retracement, then at what Fibonacci level is better to take entry? In an uptrend, if the price is retracing and we use Fibonacci retracement, then what fifth level is best to take entry? Okay, that's a crucial point that we are looking at. So if you look at a market, all right, so if you look at here, okay, you can see that it's in an uptrend and the trend will never move in one direction, right? So it's gonna come back for a pullback and then it's gonna create another impulse, will come back for a pullback or the retracement, and then it's create another impulse and will come back for another pullback or retracement. So when the market, the best entry happens when in a retracement or a pullback. So how do you know that it's in a pullback or a retracement? By understanding the market structure. Now, at what level you should be entering? So if you look at the Fibonacci, first of all, Fibonacci is a tool, right? It's a tool that is used for understanding the retracement level, at what level it is retracing. Now Fibonacci is, how many of you understand about the Fibonacci? So if you look at, okay, this is Fibonacci, right? How many of you have seen that? The mathematical explanation of Fibonacci is, if you add two consecutive number, right, you're gonna get 3, right? And then add 4, the next one 7, and then add the next number 15, and on and on and on, right? So that's Fibonacci. Now that is also nature's code. Golden ratio. Golden ratio is where used, because if you look at the nature, you understand many things. The nature is highly precise, so you can't even measure the preciseness of nature. Uses the golden ratio to create an energy efficiency, because it's all about the energy efficient. The less energy you can use to create the highest outcome, right? That's what you can learn a lot from the nature, being energy efficient. You see that our brain also do the same thing, and that's why you'll see that even when a trader started to lose, okay, and become a habit for a very long time losing, the brain take it as an energy efficient act, and then acting, and that's why it sometimes get difficult to get out of it, because what the brain does is it follows the path of least resistance to become more energy efficient. The brain doesn't do anything that is either good or bad for you. It will always follow the path of less energy required to do something, okay? So which is called the path of least resistance, which is also the same way as the neuro pathway. So when you look at the brain, anything we do, we create a neuro connection, right, in the brain, either, you know, whatever way. That's why you'll see that it becomes hard to break that neuro connection, to create a new neuro connection to do something. But once you are able to do that, it becomes a new habit again, and the old connection become slowly disappear from the brain, and that's where you create a new pathway. And whenever you create a neural connection, it's basically an electric cable, like the electric cable, that the energy flows from that pathways, which is the direction of that, and based on that you experience your outer world, how your brain is going through, which connection you are using to do certain kind of act to experience a different reality. So depending on that, and that's where the energy efficiency come. But if you look at in the same way, the nature also use exactly the same kind of energy efficiency by using the golden ratio. You'll see that any fruits or any flower, they are highly designed to be more efficient, right? That is golden ratio. So in trading, the retracement, the pullback is where 61.8%. So if you look at the Fibonacci, right, so look at the Fibonacci here, 61.8% is where the golden ratio. And but because the market is highly random, right, it's very random, and that's why you'll see that it's very difficult for you to always find the same pattern that you have seen in the past. There's always some kind of variation comes in play. So we use the Fibonacci as an added confluence, because when it aligns with high level of support or resistance, high level area of value, we can use that for entry, which is depending on the strength of the trend. Normally 61.8% is when it is aligning with the key level of support or resistance, you can look at that trade. I hope that makes sense to you and it's understandable. Very easy, just you need to look at always from a different perspective, right, in the market, to see that what confluences you use. The number one is trend. Always look at the trend and then wait for the breakout structure, and then use the rest of the confluences for an entry criteria. Okay, now we see that we are waiting for this market potentially to break to this 4-hour support. The market already has made significant move, and if you look at the 1 hour, you can see this is the 1 hour candle closing, and with that candle close, it's closing as a bullish candle, leaving a key level of support here. Now the current support level is 3771. $3771 is where we can look for buy limit. I'm waiting for the market to potentially break at that level or below before we look for that entry. Now this is where the level that I'm looking at for potential breakout. You see that all the trade that I'm opening, I use the buy limit. Why? Because of that level. Because you can't, in recent past, you can predict that the market reacted from that level in that way, and it is highly likely. But if you don't know that what's gonna be here, right? So I don't use the buy stop because of that reason, because you don't know at any point you'll see the market will grab liquidity, reject back again, though it is a potential trend continuation here. So the candle closing on the 1 hour and also the 4 hour candle close coming up in the 1 hour within a short period of time, and that's where you can look at this market to potentially break from that structure. This is a very key level of support, 3771.10, wanting the market to come back here to retest and then to reject back again. Patrick, hello coach. On the 15 minutes time frame, gold Xauusd, there is a 3 FBG. Which one will more high probability to be filled for confirmation? Okay, so on the 15 minutes time frame, gold is there is a 3 FBG. Let me have a look here. So on the 15 minutes, 3 FBG. So there's one here, there's one here, there's another one here. Okay, so that's which one is more high probability to be filled for confirmation. Okay, now looking at the FBG, right, which is, you'll see the market will more often will fill those FBG. Now along the way, it will leave those imbalance in the market, and with those imbalances, if you look at, this is where the market created this initial bounce followed by this pullback, another bounce followed by deeper pullback, another bounce. We can see the market again coming for a pullback. So the market, the first instance is that it's gonna feel the nearest imbalance, right? Without that, it's not gonna be able to break that low. The way it is heading, we may not see that this FBG that you can see is filling out before it breaks this high. This is a trend that we can see the market is maintaining, and high chance that we would see that this trend continuation to the upside here. Now, as we see that this market is maintaining this uptrending market structure. If you look at here, from here, you can see that this is an upside here followed by narrow pullback, another move, deeper pullback. So where it is leaving FBG, okay, but when we are looking at the fair value gap, all right guys, keep in mind this is a very important point. When you are looking at the fair value gap, do not look at the fair value gap in the direction of the trend. Look at the fair value gap when the market is approaching the trend. So what do I mean by this? The best way to know that is to understand that the overall direction of the trend that I'm going to explain very shortly. Now, when you're looking at the fair value gap, okay, if you look at this one here, now here we can see the market, where the market is approaching that area. Okay, we see that breakup structure that we are waiting for potentially, and it's slowly building that momentum. Now here I'm going to place that level, which is a key support level that you guys can see here. The market is approaching this intraday. This is the 1 hour price action with the market potentially to come back here. This is the 4 hour level, and you guys can see the market is potentially coming to retest that zone. So if we look at our potential entry criteria here that I'm looking at in this area for buy limit, so this is the 4 hour previous sessions low here. So if you look at here from this support, from this level to this here, this is the current sessions level that you can see, and so if you guys look at 3771, which is potentially a level that you can look for possible retest. With a 1.58 here on the 50 minutes for the stop loss to this level, and so around 75 pip stop loss that you will be placing. This is a buy limit, not a market order. So placing this pending order here for this possible breakup structure in this market. And so place that pending order in that area for this possible breakup structure in this market. We can see that there is a potential for breakup structure, and from the 4-hour chart that you can see, it already has made significant bounce to the upside, and breaking below here. We see this candle has still 2 hours to go. The possibility for a breakup structure is here as the market has broken that high, waiting for the market to show up here for another rejection below, and that is where we will be entering into the trade for this drop, potentially coming back to this level. Okay, the market is coming down here. We have placed the pending order and would like to see that the market is showing up. Looking for a potential entry here. We place the buy limit on gold and expecting that the market to retest and then to reject back again to the upside here in this market. You might get a trigger here. We see that the market slowly building that momentum back below. So we are nearing to the potentially to entry level. So there is a 15 minutes close coming, and this is a long wick candle that you can see has formed, and expecting to break that low here, to retest and then to reject back again to the upside in this market. It's almost there. This is a complete breakup structure. Come on. We have few pips left for the entry, only 5 pip away for our entry to trigger, waiting for the market to show up in that area and then to potentially to get a trigger and then reject back to the upside for another bounce of that level. Now there are now it's breaking. Now we can look at that fair value gap that we can see here. Here there are two areas. Then with that fair value gap, the market to potentially come back for a retest, and we will be taking here short-term position for a potential upside. Okay, you can see that there is a potentially a pattern formation here, and waiting for the market to cross that low, grab the liquidity, and then potentially to reject back to the upside here in this market. Getting the rejection again here. Come on. Okay, we see there is a long week candle and waiting for the market to potentially break that low here, potentially to have another rejection. We see there is a reaction coming from the top, and would like to see the price to break that support. 30 minutes candlestick pattern, we can see this is a long week candle from the 30 minutes, and that breakup structure, once the price managed to touch that low, we are on the trade. Welcome, welcome, welcome. $3771 is buy. We placed that pending order 3771. Mean I learned something from the breakdown analysis of that chart. Big buy up to you, bro. Welcome. Yes, this is what we are doing here. You know, we are every single day we have, you know, big community in the academy, hundreds of traders trading with us every single day. We have also the most updated strategy trading tool. Trading tool currently is very important, relevant. You guys can see my chart. Can you pay attention here? You can see something here. This is gold 5-minute chart, and in the gold 5-minute chart, can you spot this signal here? This is a buy signal showing by this indicator. This is not an indicator, this is a strategy. That for those who have joined the premium Zoom class, in our previous session also we discussed that. Now my goal here is to give you the full detail of the strategy, because here our mission is to help every trader in this planet Earth to find the edge in the market. Because when you trade based on edge, when you trade based on strategies, you are ahead in the game. Now you don't have to always remember every rules of the strategy. When you are using the indicator, the best thing to use the indicator at any time frame you can use. Try to avoid using on 1 minute because it's too fast. But when other time frame you are using, try to find a trending market. You can use on gold, use on dollar yen, use in British pound, US dollar, euro dollar, but try to find a market that is trending, because this is the trend following indicator. And in a trend following indicator, whenever the smart money is entering into the trade, we are on the trade. That's the way to use this indicator to find the market that is trending, and try to use take any signal giving with this indicator in a high impact news, because the indicator will not know that there is a news. That's only the thing that you need to make sure. The rest of the things, use proper lot sizing, use 3-5 or 3 at least 3:1 reward to risk for your take profit target. Isn't it easy to trade? You guys have seen I'm trading every single day in this live market with all of you. And for those who are in the group, I'm sharing all the screenshot, the live account results in the group to help you to understand how to trade and how to find the best setup in the market. We are nearing to entry. We might get a trigger here, trade, right? So, and also as soon as I will do any modification after the entry, I will give a shout out. Still my trade has not got triggered. Okay, I am active. My trade is active with me. I am in the trade. I'm in the trade now. And also I will be, anytime we will be ready to do any modification with the trade, taking any profit or doing any kind of management. Trade management is very important when you are trading. So this is the lower time frame. We can see there are some bearish price action has formed here. So we'll look to see that how the market is creating. We see some upside. This is a scalping trade. It will not take too long. So the 1 hour price action where the market has crossed that low. There is a stronger bearish lower time frame price action is being formed, so the market might try to fill some of the fair value gap. So we will be keeping our trade potentially shorter. We might be taking profit very soon. We don't want to see the market going too deep here. Lower time frame, we can see some bearish rejection here in this market. So from the 4 hour that you can see some as soon as the market will have a rejection, we see some kind of rejection that we are expecting here to the upside. $30-minute candle closed, and this is a 30-minute candlestick pattern that you can see. It closed with a big red candle, and what we can expect here, a potentially rejection or retest of this resistance line. Market is going above our entry, and okay guys, so this is a pending order, so we all have the same entry. I would like to take a short-term move here. You can see the market is trying to fill that area, and we are at entry. This is a fast track entry, and Okay, the market structure forming here is potentially it's now in a consolidation. If the market showing up that potentially to break that low, which we still see that upside here, will not be running too long, as the market is at our entry at the moment. Okay, possibility for a downside is higher, and okay, we see some upside, and we'll be taking this trade as fast as we can. We want to see a bounce off to our profit area, and from there we can look to manage the trade accordingly. Where the market is heading here. price on the support level on the intraday. Here we're down to 17 pip. Now what we need here for the market to go for a pullback, as if you guys look at it, you can see this is a significantly, we see the rejection from the higher price, and as the market on the support, there is a comparatively bigger fair value gap. So would like to see that the market is being able to break from this here for us to trade that fair value gap. It's on a support level, which is key level of support, and are we going to see a rejection from here? So it just overextended below and 4-hour level. Okay, so getting some reaction back above in this trade, we would like to see the market to potentially cross that previous resistance line, where this is the previous resistance line here. It got overextended in one direction here in that area, and from this support level, this is the 5-minute chart. We can see that this is a long wick doji on the 5 minutes, which has extended below. Okay, the market has closed past this long wick red candle. So are we going to see a rejection here, as it's now grab the liquidity here? Now if the market breaks below, we might see that deeper movement, but at the moment here is the price to show up a break of structure in this 1 minute local downtrend. Now we see that upside going up. So what we will be doing with this trade, guys, is the market to go up to cross this high here, get into the profit zone, and once the market managed to bounce off that profit area, this is the 15 minutes close also. Now we might see reaction back above. We are almost nearing to our entry. So this move, they're expecting it to extend above, unless the liquidity requires for bigger move. Here you can see the market. This is the 5 minutes candle with a long wick, and where from this support, if it got the rejection, we can expect it to bounce off this level to the nearest resistance line. So there has been significant fair value gap. The price is trying to fill that area where so what we can see in that area, the market to possibly to reject, and where is if you guys look at, you can see back to back two bigger head and shoulder. Here the market is from the 1 hour, it just has got broken back below, and we see there's a kind of close coming. we are on a zone where from this level, can you see a reaction here? The market is on a from the 1 hour again, it rejected back well below this level. The price tested this 20 EMA and also the 10 EMA. Getting some reaction here. Now this trade, once this is the 5-minute candle, and you can see that rejection from this support. We could see the price to cross above that our entry, and 30 minutes also we can see that there is a long wick. Where okay, so from here are we going to see the crossing 3371.08 level, and breaking above is where above our entry. Thank you very much. We can see the market is trying to push back here. The market is showing up to that potential rejection back above. We would like to see that it's carrying the reaction to this key level. We will be looking to see this trade going into the potentially in our profit area, where in that area where the market is heading, and as we can see that price is slowly building that momentum here, where we are looking at the market to show up its momentum. Okay, we can see that there is some reaction from here. Would like to see the prices going back to our profit area, and then we will be managing the trade. Either we will be closing with the running profit, or we'll keep running based on what kind of market structure it is forming. You can see that the market is building up that momentum. As soon as the market will reach our profit zone, I'm going to close the position. We will not be running too long. We would like to take the profit first, because the market has dropped well below. We will not be taking too long here for taking the profit. So as soon as the market reach inside our profit area, with this movement we will be exiting the trade, or even at near entry. As there is a, if you look at here, you can see this is a rejection, expecting it to go back up to cross that high, and Okay, so you see that there is some reaction coming in that area where the price is and would like to see it's crossing that high, guys, ready for a potential bounce off that level. And once the market managed to bounce off this level here, crossing that high, we will be solving this trade. That means we'll be exceeding the position with the even with the minimal profit, as the possibility now the market to move in both direction. The possibility to go up is higher. So you can see the market is approaching our entry. Would like to see first of all cross that high, and then to if you look at the 5 minutes, you can see it's now showing that the market potentially to break that previous resistance line, which is potentially go back to high up. And from the lower time frame, we can see some potentially here local bullish, but at the same time getting some reaction. Okay, so you see that rejection, so which would like to see that it's forming a potentially an inverted head and shoulder, and with that inverted head and shoulder formation, the market to trend back above to the major direction. Crossing that potential entry zone. So you see there is an inverted head and shoulder. It is playing out back to 3774 level. Right, near our entry area. Right, getting into the profit area, we are at entry and would like to see that crossing, reaching some profit, and then once the market will be able to reach some profit area, we will be out of this trade here. And showing some bullish rejection, which is in our favor, expecting it to bounce off that level with this inverted head and shoulder, and we have entered into the profit area now with this trade. I will not let this market to go down further, where expecting it to have a potentially upside bias. Like in the market will not listen anyone, but by the way, we have to manage the trade accordingly. So where we can see the market getting some reaction from this top again, where this is the 1 hour candle closed. You guys look at it, this is the 30 minutes candle closed also with a doji, and wanting to see the market is crossing this high. possible upside possible here to bounce off that level. We are at entry, would like to catch some peep after such a long time waiting for this trade to come back to a zone where, come on, it's getting some rejection again. Here's the 1 minute chart, and we need to some interesting price action is being built up here. Come on. Waiting for a new higher high. Going up again above our entry. Come on, cross that high. Getting that candlestick pattern bounce off that level. Now if this market is trending here, there you can see a more narrow pullback, another more deeper pullback, we can expect it to create a new higher high. And the way the market structure is forming, I'm still holding the trade. I'm at entry. I have just entered into the profit zone and would like to see the market is breaking that high here for a new higher high. And okay, at entry I'm waiting for catching some profit in that area, and then we will be looking to see the market is potentially breaking to the upside here. Okay, all right, getting into the profit area, running profit, and let it bounce off that level. Okay, it's getting rejection from the top, and what kind of price action is trying to build up here. We might see that because this is a unusual break below, we could see the market to straight going back up to the high again. Waiting for a potentially bullish price action confirmation here, and okay, here as you can see that lower time frame, if we look at little higher time frame, we can see that there was a doji, the market has crossed that high, it's now trying to break below, but because it's there's a bullish rejection here, are you going to see a new higher high? Now this is the 15 minutes price action where the candle potentially closing as a bullish doji, which eventually could break to the upside, and if the market breaks to the upside here, which is lower time frame that showing, we're getting some reaction here, so we're waiting to see that the market to potentially continue to uptrend. This is a little tedious sideway market that you can see in this area on the lower time frame, which is before a breakout the market does that, and is this bullish or bearish? That's the question, right? The market testing both direction, the liquidity gap here also. It's a very slower movement in that area, and gold is in this zone 5 minutes, quite a few long wick, and then we see the price is trying to break below here. So from the 1 minute sideways movement, if we look at the 4-hour chart, that you can see it is a long wick doji, and what I think the price to go back up to test the 4-hour resistance is higher. It might remain little sideways and then to potentially to reject back above. So you can see there is a 5 minutes and the 15 minutes candle close. 15 minutes candle closed with a big long wick doji. Okay, here getting some bounce of this level. The market in a zone where we'll be waiting for rejection again. Okay guys, look at, you can see the market is maintaining that uptrending for the long term, and welcome going up, I think rejecting. Now where is the signal, sir? The market, we are on the trade. And it's the way the market at some point we will see that the market is filling that zone back to the upside. You see quite a few long wick candle. The volatility is little less here, and that's why you see sideways movement as you are progressing through the session here. If you look at the 5 minutes, now for this trade, as we can see the market having potentially for some period of time, we might see that volatility picking up later today. If we look at the 1 hour 30 minutes candle also closing, this is the 30 minutes price action, which might close as a doji. Now if this 30 minutes candle closing as a doji, we can see some upside. We can expect the next one to bounce of that level. So from that perspective, if the market bounce off this level, then the possibility to go up and to create a new higher high is higher. So So here with this movement on gold and with this pin bar, if you look at here, you can see it's whenever the market is coming down, some bullish pressure coming in. There is a long wick rejection here. Okay, bullish rejection has come, and now we're waiting for the market to go up to hit that level, which is, you could see that if the 5 minutes candle closed also as a bullish pin bar, which is potentially bullish price action and expecting the market to cross this recent high. Ready for this trade to go up and cross our entry. Getting some rejection here. Come on. Why it's taking too long to load the chart? Okay, getting that rejection back above, and that is potentially an upside bias, so I'm still holding on to the trade, and really don't know why it's updating on the 1 minute. Okay, getting some rejection to the upside. That means here we saw that there is a liquidity gap, and that liquidity gap could lead the price here potentially to the upside here to create a new higher high. So whenever bullish bias is coming, the sellers trying to sell. So multiple liquidity from the top. It's a very interesting market being formed, and looking at here, guys, that potentially this market, if you look at the 4-hour, we can see, let's delete those lines here to see that 4-hour market structure. This is the 4-hour market structure where the candle has created a long week price action. And what looking at here is with this the candle close, the market potentially to react back to the upside, and so our entry is on, and we look at the daily market structure is bullish, and 4-hour chart, the candle close coming, we could see that this market potentially to retest and then to reject back above. So here is the 1-hour price action. Okay, there is a double bottom again, and it's a big 1-minute doji. Now with this double bottom, the market is getting that reaction back above. Let's understand that now from the bigger picture perspective, from the lower time frame. If you look at the 1-hour, we can see that from this support, pretty sharp rejection from the 30 minutes. This is also the 30 minutes price action, and it tested the low. Now it is possible for this market to completely bounce off this level, that you can see some reaction coming up, and I'll still be holding on to that as we have held the straight for so far. And as there's a double bottom with pretty sharp bounce from this double bottom, expecting it to cross this high here again, and all right, with the doji, then you can see the market has made its move back above. Okay, having the rejection from this level, getting back to the upside, and okay, we can see that bounce off that level. We are on the trade, and here I'm still holding on that market to go back up to that key level. There we can see the lower time frame price action to bounce off that, and we are looking to see the market is in that area. It's showing that potentially, but I think we might see some further downside from the 4-hour chart. That you can see the candle is trying to break that low, and it's potentially coming back to this 1-hour daily support level. And but I think here the market might try to test the daily support. Therefore 5 minutes price action, that you can see a doji. There is an imbalance in that direction. So in this trade, guys, what we will be doing here, we will be moving our take profit target at entry. As we can see, the market is showing that potentially to have some bias here. So moving the take profit target at entry, where we will be making it a break-even trade, and the possibility for before the candle with the 4-hour candle close, the market to drop again. As you can see, the price is trying to push that pressure back below. What we are expecting here before the candle close, the market to bounce off that level for a pullback, and we will be exiting the trade, potentially break even. Here it's on a support, and the possibility for upside is higher. Here you can see there is a doji on the 5 minutes, which is in this area. The price is trying to fill that fair value gap, so will not be running for the full profit target, or we'll keep in that direction the stop loss in the same place, but we will be keeping our take profit target at entry, so that we can exit this trade break even, and we will be re-entering again once the price is showing in a better area of value. That being said, we had a big session, and coming up another one very soon in NY session. We'll see there, guys, trading live together. And here at the moment we will be waiting for the market to potentially, you can see some pullback coming, and with that bounce off, right, so we can see the market could potentially go back up to hit that level. Our entry is here, so we will be exiting the trade break even, and once the market shows clear direction again, we'll be looking to enter again. As this is if you look at the daily chart, it's a bull market, so once the market drop again for deeper pullback, we can look for entry in this market again for another move. Until that, guys, stay well, stay happy. I'll see you there again in another live session coming up in few hours. We'll there have a break, and then we'll trade again with the